All right, man. So yeah, everyone, welcome to the workshop today. I wanted myself and Carlos wanted to present this to you guys because I know we've kind of been busy with the trading room and everyone that's involved in there, but we wanted to reach out to the public and give this presentation at the channel is about what our indicators are about. Myself, Carlos, and a few others have tested this, and we did it for about 3 months. With that being said, we came down to about, I think, a 97.8% probability of success with these, as long as you understand the theory and not exactly the signals. The signals are the first indicator that you must look at, but then there's other variables that you need to study and think about. And hopefully this workshop is going to open your eyes to trading and investing and get you involved in making better profitable margins. So with that being said, I'm going to show you the charts and just go over some stuff and some of the back tests that we saw and how we carry that over to hindsight and live trading so that we can make better predictable positions and make better profit margins. When we're always trading, and I don't want to jump one thing to another, but real quick, we always shoot for 5% to a 10% profit margin. That's usually when I myself personally take target or profits. That's my target, to each his own, but I always stress definitely take your profit when you can. Never get greedy in this industry because the markets will pull money from you and not give a crap. So with that being said, I want to take a look at the SPY and US dollar and just kind of correlate with what we saw back in 2007, 2008 timeframe when the market was looming a crash. A lot of people had been aware of this ahead of time, and you're going to see how they had done it. There's no magic to predicting market moves. It's literally just being in this stuff long enough and understanding that what goes up must come down and vice versa. What goes down will eventually increase in value because we have a normal nature in ourselves and in society where we always try to grow and inflate and just that natural following of inflation. So anyhow, the 2007 of what I call was the actual crash, but it didn't happen until around September of 2008. You're going to see on the signal exactly what was going on back then. And that's what I was afraid of. You just go in. Oh, that's why. So when you're using TradingView, if you're trading stocks or crypto, just make sure you're in the correct tab, because as you'll see, it wouldn't show up the history of way back then when I'm scrolling back. So like I said, 2007, the crash actually had began, and what came to realization was that 2008 was actually considered a crash. But if we take a look at the chart, this is a weekly chart. Weeklies are good trading mechanisms and chart time frames to resort to when you're trading a position longer than 30 to 45 days, like stock options and whatnot. And then if you're trading daily and you're not in the market more than a week, usually I start going down to a 4-hourly, a 30-minute, and 5 and 15 minutes. But anyways, 2008 came along, and September we had a peak point. The M had started, and I always tell people look for M's and look for W's. W's, you can think of a Wyckoff, and then M is Madoff. You can read about those guys and their theory and what happened to Madoff, and then what a Wyckoff distribution and accumulation period is. But the easiest way I remember for these chart patterns is an M is actually going to be a bear and a W is going to be a win. So an M was looming. We saw this peak. It fell down, it peaked, and then it started tumbling therefore after. So around October of 2007 was the crash. In fact, but remember, people really didn't consider it until I think around at this point, August, September, and then you can see. But if we want to really look at the highest point of when some of the hedge funds, institutions, and banking analysts had actually called it, and people wonder how they done it, it was literally seeing the M. And then if you take a look at the chart signals, We had a couple bears here that started pointing, which are the red signals. And what we have done is we built a revision of MACD, a TTM squeeze, and an RSI. And then with that being said, we incorporate an Ichimoku cloud that we've also revised to certain inputs to match crypto or stocks. Being said, stocks have a 5-day period where they trade, and then they close down for the weekends, and they're only open 9:30 to 4 o'clock p.m. Eastern time, being New York, where the stock market is hosted. So with crypto, it's 24/7. So we have had to go back, revise some inputs, see what other community coders and developers and traders and investors were using, and we kind of tweak those to even more better inputs. And we have a pretty strong system in our trading mechanisms right here. So real quick, we're looking at the weekly, and as you can see right here, it started falling. I solved this, and you can see that it actually started turning red. And what I tell my guys is, using the Ichimoku, anytime we have this lagging span line or a Chiku span line that ends up hitting our trend in either a 4-hourly, daily, or weekly, the trend is overall over. So we saw it coming in the weekly, and when you see something in the weekly, you want to go back and start looking at everything that's happening in the daily. There's the daily, here's the 4-hourly, and so on and so on. Then it gets kind of choppy. So this 4-hourly chart, and it went back on me, but let me find the exact, make it easier so it won't bounce back on me. And here's something I really want to let you guys know is a step to the side for a second. If we really consider a market crash, look what's going on. February 20th, what is it? Carlos, did you say something? Okay, so anyway, February 20th, I was involved in stocks at this point, and this was actually a worse crash, but it was less talked about. Around COVID hit, and if you consider the 2008 stock market crash, we had, I can't even find it in correlation compared to all these other dips, and these aren't really considered crashes. And if you look at the overall market, nothing's really crashed. It fell down, and then it's recovered. Here's the market today. We have barely ever seen a true bear long-term market in the stock market, just by looking at the daily here. The monthly, same thing. Look at this. When people talk about the great black swan and all that, we can consider, if this was hindsight, rewind to this date and don't look at anything here. You could say, well, the market was going to crash, and it did, but then it recouped. We put on a Fibonacci, and this is probably a 40% drop, maybe 30 or so, I'm guesstimating, maybe a little bit more. And in the 50 percentile, that's not even considered a reversal in the trend. Some traders trade off the 50% line, and then sure enough, it took off. So I don't like really hearing about a 2008 stock market crash, because I'm going to show you this. 2008, where are we at? Right here. So let's focus on this price point right here. We had this SPY at 200, and then all of a sudden it fell down to what's the price hovering at? We look around this area is how we read these charts. So 79, current 79. Okay, so it went from 200 to 79. That sounds bad, but then we look at 296. Or actually, I'm not reading this right. Where's the, why is it changing on me? Let's see, hover, there's the high, 339. Like that. All right, bear with me here. I'm trying to see what we were. All right, so anyway, we went from right here, and this was a good drop, but it retraced, and then February 20th came around and it fell off right here. So technically we're still in this bear market. But overall, we're still bullish. So until this Chiku span hits the monthly, then I'm going to start looking at a weekly and see where the line is. Oh, now my interest is kind of peaking because now I'm really going to start paying attention to my charts. We get a red signal. Bam. Daily. We're definitely already in the red. 4 hourly. It's recuperating. But remember, you still have this monthly to go back on. I'm not saying that it could not be a fake out, but let's focus in on the 2008 again. Okay. 2008 happened. Our line hit, and it actually was right here. And our line probably would have been around at this point. Here we are today. Here's our lagging span. Our lagging span is delayed for a reason. And I'm going to get into all of these the MACD, the Ichimoku, and the Chiku span of why it's important and how the math is the master behind it all to be able to fundamentally and successfully read these charts. The line hit. It probably was around this point. I could go back and do the math or just look at the time frames. And so right here, the line hit. And guess what? It became a bear for a while. So all the way from October 2007 to March 2009, okay, almost 2 years. Almost 2 years in a bear market. And here's the magic point right here. When we take a look at the monthly, we see less fake outs. We start narrowing this in, and obviously the signals are more and more. So the first thing I always do in a longer term aspect is see where we are on the chart. If we're in a bull, I'm going to be day trading. If we're in a bear, for these crypto investors and what we're trying to teach you is decentralized finance, DeFi. You get into it. If you're already at this point, you either make bank, sell out, or you hold your position and stake and earn interest while the market's down. Accumulate. Okay, so this is the monthly, and I see, okay, this could be bad. I'm not quite sure. I'm going to probably hold off. Me as a conservative trader, I hold off. Weekly, for sure, I'm not trading now. Now that I see this, because look at this price, or look at this trend. We're here, it dropped. We're here, it dropped. We got a green signal. Great. It just started peaking out of the trend, and that's good. When we see the lagging span or Chiku span line, we start trading again, but now it's dropped. Look at the 4 hourly. This is one of the things that we started teaching at the beginning. When a 4 hourly chart is breaking out, we have green clouds. We're underneath the green cloud, and then it takes off. And this is just SPY. I'm going to start showing you crypto coins in a second. But right here, these are good breakout points. We get a green signal. Our last squeeze, which is a TTM-based model, it reversed. And then our RSI, being a 4 hourly on the SPY, RSI is typically, as you can see, always up. But it's hard to gauge using RSI, but that's why we have multiple indicators. In case one fails, we still have a confirmation and a gut check to resort to make us feel comfortable in the market. So with that being said, the 4 hourly will give you a lot of fake outs. Within our club, we teach how to read to get into a better position of better have a profit margin. So we get in around sometime like this when our charts start showing and our indicators start reading like this. But as always, I resort to a long-term vision to see where we're going into the future. Okay, so we have an Ichimoku cloud that's revised. We have a BSS MACD, which is a buy-sell signal indicator MACD, a last squeeze oscillator, the last one you'll ever need, because we, in our opinion, we perfected it, and it just is another gut check. And then our RSI. And RSI is commonly used by day traders and investors because it's a relative strength index. And real quick, I'll go over that. The relative strength index is a momentum indicator using technical analysis that measures the magnitude of recent price changes to evaluate overbought and oversold conditions in the price of a stock or other asset. Yes, crypto. The RSI is displayed as an oscillator, a line graph that moves between two extremes and can have a reading from 0 to 100. Now let's focus in on that. There's no infinity or infinite value. It actually goes in between 0 and 100. So that's a powerful thought process right there. That means if I see this thing at a peak, Even though this thing's up to 300, what we're going to resort to is whether or not this thing is overbought or oversold. Now, this is this perspective on the SPY. So this is why a lot of people are saying it's doomed, because we're exceeding that 100 evaluation or that 100 value. Now, if we take a look at crypto, we'll start researching a couple of those. XRP, one of our favorites. If you're not in XRP, well, then you don't know what you don't know. Go over to crypto. So here's the XRP monthly chart. It's short because XRP is relatively new. You can also check out coin market cap. Some of their data is actually more of a history. I don't know why TradingView doesn't incorporate all of the data, but I'm guessing that around 2014, XRP did become in existence, and their relevancy and the importance are around this key point. And what we're seeing in the SEC case right now is really taking a toll on the price. And now just bear with me. This is the XRP market cap. This is the overall price or evaluation. So it's around 400, and actually we've lost quite a bit of money, or they have. We were up in the billions, and now they're down. So USD, XRP versus USD, pretty much the same graph and same visual, right? So again, we're looking at where we're at. This is definitely one of my biggest portfolios, or part of my portfolio portion of it, and I'm a long-term holder. Around here is when we got in. I know people that got in way back here. I was around, I think, average of 17 cents, and I'm holding, and I'm also staking. You know, that's one of the key strategies of what we're using. But when you start day trading and putting those two together for both long-term and short-term, you're going to basically beat that 9-to-5 job minimum wage bullshit. And yeah, you're going to start changing your thinking daily. Look, I mean, I'm not going to lie. XRP looks like a bear right now, but right here it's starting to creep into our trend. So that's a good sign for me. Weekly, it's unfortunately kind of shitty, but that's because of the SEC bullshit. These indicators, I've stressed numerous times to a lot of the students, fellow community members in our Discord, is that indicators happen, and then people, events, news, countries like China banning Bitcoin make the action happen. I'm not going to say it's tied together, but I've been doing this for about 12 years now, 13 years, and these indicators pop up, and then sure enough, something pops up on the news. It's almost like they see it, and they manipulate it to make it happen. I'm not a conspiracy theorist, but I do have an open mind on stuff like this. So when you can predict or see the price coming and those changes of the trend, it can be useful for you and your wealth and your growth of it. So anyways, we've covered Ichimoku, the MACD, the last squeeze indicator, XRP. Let me go into a little bit more of a time frame and show you what these do. Here's a good buy. It did pop up. We were around 62-ish, and it popped up to 65. A little less than that 5 to 10% rule, but still a good trade if you have some good a size of an account. Right here, if we kind of get to this viewpoint, I don't like to look at it like this. I like to see my chart zoomed in. You can use your mouse scroller to kind of look at stuff like this. This gives you a better picture of these bands and how far of a width they are. We want to think of these like a rubber band. When they start expanding like this, you have more of a momentum. So these little fake outs right here don't even faze me. I would still be in. Would I take profit? I would probably scalp a little bit off, but right here, this is what I watch: the band, the stretch, and then the next signal coming up. And then this right here, this is a confirmation. Here's a yellow line. Here's a darker green line. Now, with that being said, we're probably going to cross over. And sure enough, we did. So most of my trades, they actually do happen at the lowest points at 59 and sell out at 71. XLM, I was day trading the heck out of XLM. I was scalping 25% and selling out 100% right here and making pretty good money. I was making 10 to 12%. All the community members, they were in it with me, doing the same exact same thing. I don't know why anybody would have that JOB right now when you can be learning the trade. And I understand everyone's positions are different. We've got lucky. We got in at right times at low points, but I'm telling you, we're here to help you to get in at low points and really change your lives. Carlos is managing the DeFi stuff. If there's any questions with that stuff, long-term holds, increased APYs, APRs more than a bank will ever give you, I'm going to tell you right now, the bank makes $16 for every dollar that you give them. And when I tell people I'm making 400% a year, people say that's impossible. It sounds too good to be true. Ask your bank what they're making, and then come back to me and say, never mind, I'm getting screwed all these years. I was raised to put my money in the bank and make a shitty 0.25% off a high yield interest savings account. It's ridiculous. They scam you. They have you uneducated. They keep you dumb. They dumb us down so that they stay in power and that you can't create wealth. Unfortunately, money pays the bills. It pays for a boat, pays for a truck to pull it, like the song says. And I'm telling you guys, we're here to help you. So anyways, it's a lot to cover, but you will learn a shit ton with us. I'm not going to lie. I'm about one of the most transparent people, and I tell how it is. My business partner knows that, but we're on the same page. He tells me how it is. I tell people how it is, but I think that's how it should be in life. We're not going to bullshit you people. The TTM squeeze, look it up. Moving average convergence divergence. That's the MACD, the RSI, and the Ichimoku cloud. The Ichimoku cloud is very powerful, very, very powerful. Carlos has tweaked some other stuff that he can teach you about. And like I said, guys, we're here to help you. I want to thank you for attending this workshop. It was given to you for free. I want you to utilize it. Think about your future. Think about how you can be a successful trader, and feel free to reach out to us. Awesome. So for those who have questions, just send us after the video, send us a DM, or we'll have the public chat open for a while, and then we'll close the server down. And for everyone who attended, again, I appreciate you guys, and definitely reach out to us. We're glad to help. Thank you.